The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Good morning from TFNN. Welcome to the April 27th fantastic Friday edition of today's Trade What You See. I'm your guest host, Steve Rhodes, filling in for Billy Ray. Larry Pesavento, great to be here with you. Folks, I am here to service you. So, we've got a couple different ways that you can contact me. Tell me what it is you're looking at, what you'd like some help with. You can always give us a call at 877-927-6648. If you can't call in, let those fingers do the walking. Just send me an email, steve@tfnn.com. Just please, inside that subject heading, put radio show question, and then go ahead and type in your question, what you want me to take a look at. I'll get to that. Of course, inside the Tiger's Den, like Marshall did this morning, he wanted to take a look at soybean oil, so we're going to do that during the show out there. So any ping will do. So let's go ahead and get this show started on fantastic and fabulous Friday. Thanks for being here. I'm Steve Rhodes. Of course, this is Tiger Financial News Network. Right now, we have the Dow futures trading off 38 points. S&P is totally flat. And you've got the NASDAQ futures up 34 points. Of course, I know Larry likes to say, looking good, Billy Ray, feeling good, Lewis. Well, there's a couple of other kind of quotes from the movie, Trading Places, that I like. The one that we're going to focus on today is escargot. That's right. Of course, there's the other one. I can see and I have legs. Well, does this market have legs? Now, one of the things that I know Larry likes to focus on at the open is what's going on over across the pond, specifically with regard to the DAX. So if we take a quick peek at the DAX, see where that is trading at. It's up a full percentage point right now, or 9/10, almost a full percentage point, 120 points to the upside. And, of course, I believe that Larry likes to look at the DAX because of the belief that there's a correlation between, let's say, the NASDAQ composite and the DAX. And so if you're watching this on Tiger TV, what we can see is the top panel of my chart is a NASDAQ composite. The panel below happens to be the DAX, trading out of 12,621 as we speak. Right below that is a correlation efficient. It takes a look at the last 5 trading days and says, how are these correlated? In an inverse or a direct correlation? So the red bars that are above 0 say that there's a direct correlation on average during a 5-day period, meaning that if price is moving up in the NASDAQ composite or DAX, they're both doing the same thing, downward the same thing. You'll see that there are periods of times where they are not correlated. And that is perhaps the entire reason to do what? Trade what you see. So if I were going to take a look at the DAX chart with you, we'll just start here. We'll take a look at what Stevie sees, and I think you'll see it as well. You'll see that one of my favorite patterns, your favorite pattern too, because this is how the market makes bottoms. This is how the market makes tops. In this case here, we're taking a look at bottoms. And what we can see is that the DAX was pushing lower with less relative energy. It was running out of gas. That's what those black diagonal lines on my screen are showing. Let me get my crosshair up here. You can see that the first significant time that the bulls rushed in and generated a bottom, because bulls or bears cannot hide, was when they created this key reversal bullish engulfing session. Key reversal because the market was extended. That's what my diagonal lines show. You had the trading session from March the 2nd, the bottom eclipse, the top eclipse, and then you finished higher, but it was a nice bullish engulfing candle. That was a significant level of support. Yes, were the sellers eventually able to come down and test that level? They were. In fact, they did it on March 26th, but they were doing it again with less relative weakness. Well, what gave way was the old hammer candle, and that hammer candle on April the 4th. So here's the deal. The DAX, if you believe the DAX, if you think the DAX is the dog and the composite, NASDAQ composite, is the tail, or you think that these things are correlated, then what you're looking at here is a bottom that has formed inside of the DAX. You are likely looking at an A to B equals CD to the upside. To give you a price projection on what that would look like, it would take us up into the level of about 13,225. Now, this chart here is not showing today's action. One of the things you want to focus on is how you come off of that C point of the A to B equals CD to the upside. Because if it's explosive, we'll go back to this chart, which has got the live. Let's go back to this chart over here. This will make it a little bit easier. And I'll show you a level that the DAX, you want to see that in order for this to come true out here, and I do believe that this is the message of the DAX, here's the A to B equals CD. Let me type this in right here. And what we can see is this is absolutely explosive. Absolutely explosive. Oh, so the newsletter didn't get out. Oh, man, I've got to go ahead and make sure I do that during this breakout there. Thank you, Russ, for letting me know. Thought I got that done. In any event, I'll check on that. And that's most important. But if we take a look at the DAX here, as soon as if it gets above 12,651.28, doesn't have to do it today. But if it closes above that, you will have conviction off of that C point. And this says the DAX is headed back towards its highs. Maybe the January 23rd high out here, at least the 1-to-1 A to B equals CD. And I would say if this is an A to B equals CD to the upside, there ain't no way that this is going to be a 1-to-1 A to B equals CD. That would be 13,225. Instead, you're looking at 13,474. One more breakout area that the DAX needs to get above. Now, if we were going to go say, hey, you know what, Steve-O, let's just go take a look at the FTSE. What is the FTSE doing out here? Well, if you take a look at the FTSE, it bottomed with two of our favorite patterns. Pattern number one, you see price moving lower, doing less relative energy. Let me get this cross here. You'll see that big old bullish engulfing candle getting above Stevie's red line out there. That's really important because that tells us the price oscillator has turned up. That was on March the 28th. You can see the FTSE has been taking off to the upside out here. And this has got much further to run. This is on its way back to its highs. If you take a look at the A to B equals CD pattern here, it's a giganto one. This will take us into a there's no way. This is a 1-to-1 A to B equals CD to the upside. 77.02 to 78.42 is where the FTSE is headed. So for those of you that believe that the overseas markets are telling us something, well, guess what they're telling us? These markets are poised to continue to move higher out there. Now, what's really important, because when markets are moving higher, you might say, that doesn't even make sense. Why are these markets moving higher where maybe the U.S.'s aren't? In this day and age, and we have listeners that are around the world, well, guess what? This market is a one world market. And the real key here is understanding these patterns as well as where is money flowing into. That's where you and I have to be the Sherlock Holmes of these charts. And what that means is you and I have to answer the question, what is the DAX doing in dollars? What's it doing in euros? What's it doing in pounds? What's it doing in yen? Right? Is it breaking out? So we come back from this quick breakout here, pay a few bills. We'll go take a look at it. This happens to be a chart based on a monthly time frame. But what's the DAX doing on a daily time frame? Is this breakout real? Is it funded around the world? Thanks for being here. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, to any of my subscribers out there, just got that newsletter uploaded. My apology. You know, we're all creatures of patterns. And what you and I take a look at is patterns out here, pattern recognition. And I'm so used to doing things a certain way. The newsletter was done at 7:30, 7:15, whatever time frame that was. And I just simply thought I uploaded it and forgot to. So my apology. I tried to get it out at by about 8 o'clock in the morning, 8:30, something like that. That way, those folks that are wherever you're at around the world, driving to work, whatever it might be, you've got some time to take action, such as the action this morning that we are taking, which is moving our stops up to break even in our long trade inside of the NASDAQ 100 out there. But back to the question with regard to what's the DAX doing in major currencies out here. On a long-term basis, it has not broken out. It has these yellow horizontal lines, that hurdles that it needs to get above in order to do that. But on a daily basis, right, on a daily basis, that's where things begin to start. And what we can do by taking a look at what's the DAX doing, what's the FTSE doing, what's the Dow doing, what's the NDX doing in other currencies, it's really helpful to understand. Because here what we know is right now, if the DAX in U.S. dollars closes above 12,601 today, you've got a breakout going on. It's up above a level of resistance. Inside of the euro, it's already done that. It's already done that. It broke out a couple of days ago. Yesterday was a nice wide-ranging bar to the upside out here. With regard to the DAX inside of yen, that is, and you see, if you are a trader, you are a momentum trader, you are a breakout trader, then you're taking a look at your screen with regard to what's going on across the world in your currency. When you go out for dinner tonight, you're not thinking how much is it costing you in yen, but if you had that same meal and you were over in Japan, you would say, wow, this is costing me a lot in yen. Well, you might. All you're interested in is something breaking out or breaking down. So the DAX in pounds, in yen, in dollars, and in euros is breaking out. There is a breakout party. Something to think about. Now, we'll come back to the FTSE and others and take a look at, but there are some folks that put in some questions out here. And one that came in, and we'll get to the soybean oil in a minute, but one that came in is if I could take a look at the euro. This is Chris F. And, you know, when I began, so I've been doing the radio shows and a newsletter service for Tom for, I don't know, it's been 7, 8 years, something like that. And when I began my journey into technical analysis, it actually began by trying to understand why did something fail. I don't know about you. So back in 2006, my portfolio was just simply full of individual stocks. 60, 70, 80 individual stocks, which was a lot to keep track of. And some of those stocks, I don't know if you've ever had this experience, but some of them they were great companies. They were just doing well. Of course, we were in a bull market back then. I didn't necessarily understand bull market, bear market, so to speak. I just knew, hey, this portfolio looked really good. But yet somebody would come out with earnings. I don't know. Maybe it was Red Hat. Maybe it was Nutrisystems. Maybe it was Hanson Natural. Whatever it was. It could any of those. And they would come out with earnings, and then the price would just simply, I would get pummeled. It could be 20% moves in one day, a gap to the downside, yet the earnings and the revenues, because I was a fundamentalist. And after enough of those, I wanted to understand in my holdings, could I figure out where something, when it failed, where was it going to fail to, so that I could do the proper reward risk. That then led me to being able to draw patterns like this, understanding, and that led me to Tom. So then I really understood, and I immersed myself in price and volume out there. But that wasn't enough. That wasn't just the total answer. So then I started getting involved. I hired Tom. I hired Larry Pesavento. I spent big bucks because I knew that the quickest way to learn something was to go to somebody who already knew it. Go to find an expert coach out there. The do-it-yourself and just read some books, even though that's good. You've got to be able to have a good coach. At least that's my belief system. And then I learned about the Gartley buy pattern and sell pattern. That's what I have out here. In fact, as I was doing my shows back then, somebody reminded me, hey, weren't you just kind of like an expert in the Gartley patterns, the A to B equals CD patterns? Well, Chris, to answer your question, where is it that the euro is likely headed to? There's a potential Gartley buy pattern in the 120 level. It'd be about a 0.618 retracement off of the swing points in December. It'd be a nice A to B equals CD to the downside. But just because I give you that target, you'd have a nice about a 1.272 expansion between swing points. It's a pretty looking Gartley pattern. But markets are going to continue lower until the cavalry arrives. And that's what led me to understand the weaknesses of taking a look at just assuming that a 1-to-1 A to B equals CD was where price was going to go to. Because what I found out was that was not the case either. And you don't want to assume that. So how is it that we give ourselves an edge, put a probability on our side that, in fact, the cavalry has arrived and they've got our backs? And that is by understanding your bullish and bearish candles out there. And that's important. And so then I hired Steve Nissen to be able to express. You see candlestick signals printed on my chart out here. So back in 2006, I purchased his software, like $1,300 back then. And, technology was good. It's not anywhere near as good as it is today because I didn't even want to have to think about what was showing up on my screen. I just knew what it was that I needed to see in order to take a long trade in the euro. So I don't know if you're short, Chris. I don't know if you're long. Price seems to me to be headed towards that 120 level. It may be headed lower. The first time you'll know that the bulls have your back, depending on what trade you're on, is when you see some type of bullish reversal candle form. Just like the bears up here, a nice bear sash candle up at the top of that A to B equals CD. So thanks for writing in. Thanks for writing radio show question and on your request out there, on your email, Chris, Steve@TFNN.com. Let's take a look at soybean oil for Marshall in the den. Now, Marshall, are you looking to get in? Are you in? Tell me what you're doing out here, or don't tell me. I'll tell you what soybean oil is doing. I'm just focused on really one time frame chart out here. So another set of tools, folks, if you're not familiar with me, that I like to take a look at is TAS market profiles. Beautiful levels of support and resistance provide us with a ton of information. This provides me with the confidence to be able to say to Marshall and all you out there that are trading soybean oil, that what you want to take a look at is the level of, now I'm looking at the July soybean futures contract. I believe that is the active contract. And right now you're looking at 1029.20 out here. You see that price has found support. It tested support this week. That is by the way, the structure of this weekly box, let me just expand the screen up on my, expand the panel up on my screen. You're going to see the green line is support, the blue line at 104. 81 is your center of the box, and then the top of the box, that's your resistance level. Support has held. It's been tested this week, and it's held. Doesn't mean that it can't fail, but you're saying December. I've got the December 2018. Let me see here. I can do this for you real quick. I can, but you know where July is at. But if we take a look at December 2018, yeah, I'm not getting it. I'm not getting it, my friend. Marshall, sorry. I'm not showing that as the active contract out here. So I do what I can, and that's all that I've got with regard to, oh, now I've really just messed up out here. Give me a second here to do this, try to pull this back up on the screen. So here's July. That's what I know. Price has found support out here, and until that support breaks, I think soybean oil has found support. This is Steve Rhodes with TFNN, filling in for the one and only Larry Pesavento, who I owe a lot to because his work, my learning his work, is what helped me to become the #1 market timer for the S&P 500 for the last 12 months, 6 months, 3 months. #1 for gold, too. There aren't too many out there who've done that.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Cash market is open. You've got the Dow basically flat, up 5 points. S&P is up 8. Trade out at 2675. The Nasdaq 100 up 100 points, 1.5%. Of course, being powered by Amazon. That's up 116 points. Trade out at 1636. Baidu's up 16. You've got Nvidia up 4. Microsoft is up 3. Alibaba is up 4 points. So leading the charge here to the downside out of the gate. It's ExxonMobil down $4. Flex Limited down 3. U.S. Steel is off about $1.50, so nothing really significant to the downside out here. The New York Stock Exchange hasn't actually, there we go, it's down about 10 points as we speak. Gold, by the way, is up $4. Silver is flat. So we do have another question that came in, which was to take a look at Square. Let's go take a look at Square, see what's going on, how this has opened here this morning. We're going to take a look at this chart here, folks, happens to be our TAS market profiles as well. So we were looking at that with Marshall when we were taking a look at soybean oil. May have been the wrong contract I was looking at, but nonetheless, we were taking a look at that and looking at our market profiles. They help identify support and resistance out here. And our debtor that's requested is looking for a re-entry into Square. So you can see that this is gapped up this morning, trading out at 48.20. It is trading with inside its daily market profile. That's the left-hand panel of my screen out here, folks. And what this tells us, in fact, if I turn off price, you might say, if you turn off price, how is that going to tell you anything? Well, it's going to tell us a ton. It's going to tell us everything that S&P and the Den needs to know. Because S&P can take a look at this daily box, and he's going to say, because he is an experienced market profiler. I mean that in a very positive way. Sometimes things just come out. But you want to be able to profile these markets that we trade out here. And what we know is, even though there's 3 blue lines, it's the center line. You're looking for its position in relationship to the top or the bottom. If it's closer to the bottom, it tells you it's a bullish structure. That would say, as prices gets inside that box, it ought to be able to explore the entire box and move up to the top. That's 51.15. So S&P can actually go ahead and make his own reward risk decision on this with this gapping up, whether he wants to trade it or not. He can also take a look at the weekly profile and say, well, okay, it's above the weekly profile, so that's pretty good out here. We have no information whatsoever inside of the monthly out here. So S&P, you've got to do the work. Maybe you've lost the opportunity. Yesterday would have been the opportunity because price had closed back into that box. That would have given you the better reward risk out here. Now you're sort of 50-50. You know, not sure how you want to go ahead and trade this. But likely what we're going to see is Square, SQ, target the 51.15 level. I hope that helps you out up there. With regard to the market itself, let's take a look at the NASDAQ specifically because it's moving and grooving, but it's pulling back right now. Pulling back, why? Because it's supposed to. You're supposed to have some type of pullback, just like we saw the DAX and the FTSE form a bottom with your favorite pattern out there, Stevie's favorite pattern. This is one that I developed out here after all those years of hard work and trying to identify tops and bottoms inside the marketplace. 30-minute chart. Short term, at this stage of the game here, was moving higher, doing less relative energy. So we're seeing a bit of a pullback. We're going to have to go take a look at some other time frame charts to identify where price might pull back to. Is that pattern important? Could it be the top out here? It absolutely could. Well, if we take a look at the bottom that took place a couple days ago, it was doing it with the exact same pattern out here. And it's really going to be the NASDAQ that we want to pay attention to because the NASDAQ is either going to power things higher, and I mean lift all boats, or it's not, because it could just do a reverse and about face and just start moving to the downside out here. So now let me come over and take a look at, let's take a look at the chart and the price levels that I think are most important for the day. And where we're going to take a look at is inside of the NQ, where it should pull back to and test to give us just an all-out bullish message. Is the price point of 67.3250. You're at 67.37 right now. I'm not sure what the low is because I don't have a price panel out here. But if price can hold this today, even if it falls underneath it here for the next hour or so, if price can hold and trades above 67, closes above 67.3250 today, that's telling us, that's telling me, that's telling you that the NASDAQ is ready to take on the #1 position and start powering the markets higher. Now, the levels to be watching. The unanimous vote would come when the ES Mini closes above 2684.75. If it doesn't, you have a tug of war going on between the NQ and the ES. And if you take a look at the Dow, that's the YM. Its number is 24,558. Now, that's quite a move. Of course, the average daily movement inside the Dow these days is 400 points, so maybe it's not that much of a move. But that would be the unanimous vote between the ES, the Dow, and the NASDAQ. If prices of those three equity futures contracts close above those levels, do not, I repeat, do not be short. Because you will have gotten signals, which we didn't go take a look at the FTSE. Let's go take a look at the FTSE on a daily basis, see if this thing is breaking out. The answer is yes. Now, this is the daily time frame chart. If you're just joining us here right now, folks, when I take a look at pattern recognition, it also includes, especially with regard to the indices, what are the indices doing in all of the major currencies. You can add other currency pairs if you want. And even though these are a big part of the U.S. dollar index, you have to look at what are you don't have to, but I would suggest that you do that. You want to be on that wall. You want to understand what are these indices doing in those major currencies, because you have to put yourself in the position of being a trader where you're trading in euros to decide, am I going to go ahead and buy the breakout in the FTSE? Am I going to buy the breakout in pounds out there of the FTSE? Am I going to buy the breakout in dollars? I promise you there are trading desks in New York, in Chicago, in San Francisco, in Florida, yeah, in your hometown too, that are taking a look at worldwide charts. Where is the money flowing? Right? How many times have we seen a movie or something that says, just follow the money? Now I'm suggesting that you just follow the money too. And here's what we know about the FTSE. It is an all-out breakout party. Maybe you should take a look at ETFs in the FTSE. Yeah, I'm going to. Why wouldn't you? The same thing with regard to the DAX. We took a look at those numbers. Now, look, in order to get to the monthly breakout, it's got a long way to go. But, hey, well, what is the interesting? I'm glad you asked that question. I heard somebody out there. I heard somebody knocking on my door and say, well, Steve, what's the Dow doing? What's the NDX doing, right? Isn't that really something that we should take a look at? Because we have levels to be paying attention to at the end of the day to tell us whether or not our equity futures are breaking out or not. If we take a look at the NDX, had a good day yesterday, had a good day today. What does it need to do to break out in other currencies as well? Well, with regard to U.S. dollars, I'd say the number is 68.5696, just to be exact. We'll just call it 68.57. That's where price would need to close above in order to be breaking out on a daily basis in dollars. In euros, we can see that it gapped up, priced in euros. Right now, the level that it needs to close above in order for there to be a breakout is 55.31. Inside of yen, we can see how price is broken above that level. That's like, so many yen out there. If it can close above that level, it's almost hard for me to read. 733,000 yen is where the DAX, where the NDX 100 needs to close above. In pounds, looks like you've got a breakout going on. Yeah. So the NDX trying to do all the heavy lifting. Sellers are out there. We're going to see who's going to win the battle today. In the DAX and in the FTSE, it's the bulls. What will it be in the NDX 100? We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Welcome back, folks. Flat Dow, it's off about 5 points. S&P is up 5. NASDAQ up 57. Russell is up 2 points out here. And a question that came in here is from Larry C. in Detroit. And Larry wants to take a look at the SPY and the IWM out here. So let's go take a look at that. And Larry also wanted to know where my red line was on both of those. I'm having a slight technical problem, Larry. So my apology if the screens populate here, which looks like they're not going to. I can't give it to you, unfortunately, as much as I really want to. Sometimes when I do the shows, and oftentimes these days, it seems like there's we've got a lot of technical things running. I've got a number of tools out here on my system. And then the communication between here and Clearwater and then out to you, it just seems like something, I don't know if it's Skype or whatever, that kind of gets in the way. But what we can do is we can take a look at the SPY zone. I can give you a pretty good feel as to where they want to go to. And I really did during that last segment. You don't have to trade the futures contracts, but you do need to know where price is at in those. And you can, we've got the there are a number of ways for you to be able to get that information for free. And so with regard to where are the SPYs headed to, let's not worry so much about the exact price here. What you want to be focused on were the numbers that I gave you inside the ES Mini. That becomes the bogey. That is the price target. I don't even know that they used bogey properly out there, did they? I don't think they used it in Top Gun. I don't think they used it because, a bogey's an unidentified, right? I think somebody out there. Look, I've got wing men and wing women that have got my back out here. So somebody will look that up and tell me. I think bogey's when it's an unidentified, right? But we've identified the level of where the ES Mini is going to trade to. I just have to find it on my screen again because I went ahead and changed up my organization of my screens just to make the show more pertinent to each of you out here. So the target-rich environment. I don't think it's a bogey. The target for the ES Mini is going to be 26.8475. When price hits that level, that's where you have to make a decision. Because you say you're long out here. I don't know what your time frame horizon is. It's possible. Yeah, this is not like a Jim Comey possible. This is like possible, like it did make a bottom, the ES Mini, the type of bottom you and I like to look at, back here a couple of days ago. So it's possible that price is going to be able to, if this is a bull run that's going to extend, then price would be able to close above 26.8475. As price gets to that area, that's where maybe you want to tighten up your stops. Maybe it's at the end of the day you want to take a look and you want to say, Steve said, if the ES closes over 26.8475 today and the NQ over 67.3250, that you shouldn't be short. Well, that would mean you could go ahead and stay with your long position. Inside the Russell 2000, by the way, first of all, if you get those two out there, because the Russell is the stronger, and even if you just get the NASDAQ, because I always like when the NASDAQ and the Russell are out front and the S&P and the Dow are drafting us. With regard to bull and bear markets, so to speak, or rising markets or declining markets. Sometimes they use the word bull or bear, and all we're really saying is up or down, right? And so you can use the NQ as your target there, 67.3250. But the target for the Russell is going to be in the equity futures contract, going to be 1574.20, a close above that level. And then that says, Larry, you should stay in your position, regardless of where Stevie's red line is at. Plus, you'd want to understand, well, here, I can tell you, finally it populated. I give it to you for the SPY. We're not going to get it on the IWM, unfortunately. But for the SPY, Stevie's red number is 265.03. And what Larry is referring to there, folks, that's actually, I like to call it Stevie's red line, is very affectionate about that line, because in an instance, I know whether or not the price oscillator, that's the bottom panel, the difference between two exponential moving averages, 19 and 39, whether it's rising or falling. Now, in this case here, your price oscillator is below zero. A rising price oscillator below zero just says counter trend move. Doesn't mean that it can't turn into a bottom out here inside of the SPY. Does say counter trend move. Likely, the price target for you in the SPYs is going to be that April 18th level, Larry, but use those figures inside the equity futures contract, because those are going to be, if you and I were sailing, just like we would be taking a look at the planets and the stars and the moon and, and everything else. Well, consider those numbers that I gave you to be the stars to tell us where price is headed to and when you might run into a bit of a wall out there. So I hope that helps you out. Thanks so much for listening. Thanks for writing in. That was Larry in my own Motor City, although it's been like forever, 35 plus years since I lived in the Motor City. Although, man, what a great place to grow up as a kid and teenager, a fairly young adult out there. Great music, great concerts. Oh, man, I miss those days. I wish my kids had that same opportunity you and I, most of us out there, had to just simply hear great music. Great music. Seems like all the concerts I go to these days happen to be concerts that of bands from back when and back then. Okay, I don't see any other questions that we've got out here as we speak right now. So let's go take a look at what's going on with some of the individual stocks that are moving. Let's go take a look at the amazing one, Amazon. We'll take a look at a couple of different charts out here. Here's my Ninja Trader chart. So we can see that price is dealing with its swing point from March the 13th. Now we'll go take a look at another chart. There is volume behind this move. Even if price closes underneath that, it is not a failure. Failure on price, yes. Failure on volume, no way. Not even a chance. Says the price is going to be up there no matter what. And if that gets taken out, if there's a close above that high, then you've got an A to B equals CD to the upside. Now, in the case of Amazon, you see we do have a rising price oscillator above zero. 1511 happens to be Stevie's red line out here, so it's looking very bullish. A nice gap to the upside. That basically is a wide-ranging bar out here. Price came down, found support at one of these red dash lines. That happens to be a Tom DeMart support trend line out here. Price is above a resistance line. That looks pretty good. So we come back to this chart here. You will see, in the case of Amazon, the massive volume that is already behind this move, 3.6 million shares. The swing point from the trading session of March 13 had 6.5 million shares. Now, look, I'm no genius out here, far from it. But what we do know is, in essence, we are going to see Amazon, should see Amazon continue to move higher. Doesn't necessarily need to be today. Let's frame it like this. If there's a close above 1615.96, that old bearish engulfing candle from March the 13th, that old swing point, you have ABCs to the upside coming out all over the place. The conservative one out here, and I do mean conservative. We'll go take a look at the weekly chart because that probably has an even larger A to B equals CD to the upside. You still have to close above 15.96. If you don't, then this pattern has not completed out here. But you're looking at 1704, 1800 as a price level. If we look at the weekly time frame chart, that weekly swing point had volume of 25 million. You're at 31 million already. Remember I said it would be a larger A to B equals CD. Now look, folks, this is over time. Whoops, sorry about that. This is over time. But that A to B equals CD on a weekly, if you get it close above 15.96, it's a gargantuan one. That says over time you're looking at over $2,000. You're at 1602. You're looking at 2038, 2225. Hey, let's do this. We come back from this break. Let's go take a look at Tesla with Jim in Palm Harbor. This is Steve Rhodes with TFNN. Dow's up 2, S&P's up 5, NASDAQ 154 points. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to Palm Harbor and speak with Jim. Jim, thanks for calling. Thanks for holding. How are you this morning?
I'm great. Good morning. I watch you every day. I really appreciate your advice, and you're really good. I really like you. I'm still
thank you very much. I appreciate that.
And,
so we have 2 minutes. Go Go ahead.
Okay, I'll tell you real quick. What I'm trying to look at, I'm looking at a daily chart 6 months, and from March 1st till today, it looks like a Gartley pattern. I don't know if it's a Gartley bearish pattern or a butterfly top, and how do you tell the difference between the two?
Well, there's a number of potential Gartley patterns out here inside of Tesla. We can take a look at the one that first just sticks out to me, which has the A to B equals CD. I'm just starting here, Jim, with September 18, 2017 as my A point on this daily chart. And I'm coming down to November 2nd, 2017 as the B point. It looks like the retracement may have been either to the high on January 23rd, that was 360.50, or is it this high? It was 360.50. So, or is it this side, 360.50. So it looks like the high from January 23rd. And what this did do is this did make an A to B equals CD to the downside. He had a nice big old bullish reversal signal, big wide-ranging bar on April the 4th out there. And that had some volume, 19 million shares. So this looks like this is trying to form an A to B equals CD to the upside. Are you trying to go long, Tesla? Or
yeah,
just...
I would be, but I'm not in it right now.
Yeah. So, you know, it has completed a Gartley pattern. A Gartley pattern. Now, there's other A to B equals CD patterns that are out here, but that one is the bigger one that stands out to me. And what a Gartley pattern is, folks, is if you take a look at Tesla and you look at the move, let's say, off of the lows in 2016, December 2016, big, huge move. So you're saying, okay, I'd like to get in on this. Where should I get in on it? Well, it would have been on the trading day of April the 4th. Jim, I'm sorry we're out of time, but thanks for your kind comments. Have a great weekend. Folks, stay tuned. You've got Tom and Tommy, the Nadex Bull Bear Binary Option Hour. I'll be back at 1 o'clock. Thanks for being here. Have a great weekend. Take care.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!